Hi everyone and welcome to today's more important analysis videos with me, Richard Perry, market analyst at Handset Markets on Friday the 31st of March. We've got a fairly sort of slightly risk negative move today. Equities are lower and this is sort of coming on the final day of the quarter. I don't think there's anything sinister in it. The equities are basically just taking a little bit of the profits off the table that they've regained in the last few days. In terms of your currency markets though, you've had an interesting sort of dollar rally that we've had in the last 3 days, which is basically again consolidating today. Those treasury yields are basically going sideways the last couple of days on the 2-year and also the 10-year. And I think just generally speaking, market is sort of biding time really for the end of the quarter. Here you can see the S&P 500, which was quite strongly high yesterday, about 0.8%, but didn't 0.3%, but didn't really sort of follow through into the European markets today. Just generally speaking, though, then markets are sort of slightly unwinding some of their moves that they saw yesterday. Sterling is just slightly off, euro slightly higher. That sort of unwinding couple of moves that we've seen on those two currencies in the recent days. So just a little bit of a retracement move across markets today. Now, in terms of what we've got to look forward to today, the inflation data for the Eurozone is at 10 o'clock. And now that is important because we had German inflation yesterday, which came in worse than expected. And the Eurozone inflation data, where is it? Just very quickly, we've just had the UK GDP in line with estimates. Eurozone inflation at 0.9% on the core. Now, it's with the disappointing move that we saw on the German inflation data. Why is that all the way back there? On the German inflation data, the risk could be to the downside on this. So it'll be very interesting to see whether that starts to drop away and the market impact on that, because certainly the euro has come under pressure with that falling inflation expectation. And at 1:30, we've also got the core PCE, which is the Fed's preferred inflation data. That's expected to be 0.2% on the month, which on the core, and that would be basically in line with last month at 1.7%. So watch out for that at 1:30. We've also got the Michigan Sentiment final reading at 97.6, which is slightly higher than the revised number last month. From the first reading this month. So that takes me to my chart of the day, which is Euro Sterling. Now we've had Article 50 being triggered in the UK. And euro and sterling has started to strengthen. Euro sterling strongly down yesterday, big strong bear candle, and that took us below the 86 figure support, which has been a basis of support or a basis of a pivot throughout February, March, and that. This little rebound, I think, is likely to come under selling pressure, because I think what we're seeing now is more corrective momentum filling through this market, certainly on the stochastics and the MACD, and this little rebound, I think, is a chance to sell, because I think there's a little sell zone now between 86 figure, 86.50, 86.50 being another sort of pivot through February and March. And I think that this little rally that we've had today in the early hours just sort of is an unwinding move rather than the start of a euro recovery or sterling sell-off. I think it's just a retracement move, an unwinding move that is going to get sold into. Now you've got that overhead resistance 86 to 86.15 on this hourly chart, but generally speaking up towards 86.50, which is that old pivot. Just helping to unwind some of these momentum indicators, but they're sort of more negatively configured now. I'd say this is going to be seen as a chance to sell. So I'd expect resistance to start to come in around about that 86 area, and I think a retest of the 85.42 reaction low that we saw this morning is more than likely, and ultimately we could even see a move back towards sort of 84, 85 area on this chart, which, if you can see here, is actually a big sort of either range play or perhaps even big top pattern. So it looks like it's pulling lower, I think, within this range once more. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.